Hello, you're watching World Talks on TVP World. My name is Sasha Farbach. The Federal Reserve's rate cut happened on Wednesday, and it adds a new twist to an already uncertain U.S. economy, raising questions about growth and what comes next for business. What kind of effect will this have on Europe, especially on Poland, which has shown its economic resilience? We also look at Donald Trump's continued impact on markets and geopolitics worldwide. Now, to help us make sense of these shifts and analyze it further, we're delighted to be joined by Matthew Winkler, co-founder of Bloomberg News and editor-in-chief emeritus. Good to have you on TVP World. Welcome to Warsaw.
Thank you. Great to be here.
So let's start with the economic news. The Fed has cut that interest rate. That is also something that has some people worried. Is this a sign of harder things to come for the U.S. and the global economy? What's your take?
I think the operative word is anticlimax because it was one 25 basis point cut that was widely anticipated. I think the market was concerned that maybe we were going to get something much more robust, and that's probably why the markets were lackadaisical, you could say, at the end of the day yesterday. No surprises. If there is a wrinkle here, it's that you might have thought that the Trump, if you will, appointees to the Fed might have favored something more significant than 25 basis points, and that wasn't the case. And the newest member to the Fed, of course, did dissent, but it was only one dissent. So it doesn't seem like much has changed. And if there's a takeaway here, it's that the Fed, for the first time, signaled that it is concerned about labor deterioration, labor market deterioration at this point. And that's a first for the year.
Yeah, so I mean, that's also the concern. You said also this, I mean, Trump has tried to pressure the Fed as well. This is a result of that. And what does it mean for is this a warning sign for worse things to come? You said it's anticlimactic in a way, but is this a sign?
Well, it's anticlimactic because if you didn't know anything about Trump's machinations to, if you like, sabotage the integrity of the Fed, you would have thought, oh, there's no surprise here. Everything is normal. Because what the Fed said was totally consistent with what the data has been, and this is a data-driven Fed. And there was, as I said, only one dissent, and that was the newest member of the Fed. So it seemed like everybody was behaving as you would like them to behave on a normal Fed, not an abnormal one.
Okay. On the term of abnormal, let's talk a bit about that as well. A president that has very much put himself into making abnormal the new norm. So I'm wondering, you've observed economic policy in the United States, around the world. What do you make specifically of Trump's economic policy? Where is this heading? How is this going to, if we compare from just 10 years ago, a few years ago, to where this is heading with tariffs specifically? What's your take on Trump?
Well, so everything that we're hearing and seeing could be considered abnormal. There's one word that is consistently ringing through Trump in everything he does, and that is the word chaos. And that's not constructive, ultimately, for markets anywhere.
And I think, as you said, chaos. So is this something, I mean, he's very much concerned about his impact on the world, his legacy. Is this a ripple? Is this going to be a hallmark of the rest of his presidency on the U.S. markets? How are other markets going to react here? I mean, this is all interconnected. So chaos, but for how long?
Well, I think the reason why chaos is the right word is because no one really knows what Trump is thinking. No one really knows what he wants his legacy to be. All we know is that everything should be about him. It's always been about him. And when it's about him, the one thing that drives attention to him is chaos.
All right. But also looking at chaos that has an impact on currency and markets. We're seeing the dollar is weakening against the euro. Gold is being more bullish. How is this going to continue in your mind?
In a historical context, those would be both two leading indicators of anxiety. Dollars lost 9%. That's a big decline in just, not even a year. And the fact that gold keeps rising is also probably cause for concern. Why? Because it signals instability. World's reserve currency is suddenly very weak. And when gold is rising as it is, it's generally a signal to a lot of people that inflation is on the rise.
All right. Obviously, these have ripple effects. Let's zoom in a bit where we are right now. Poland, seen as for many resilient. You've written recently a piece on this. I want to challenge that a bit. I mean, we've had also the Fitch ratings, which, if we look at it directly, that looks like a downgrade. We have worries about the deficit for Poland, but you're still bullish about Poland. So why?
Well, as the founder of Bloomberg News and the founder of Bloomberg, Mike Bloomberg, used to say, "In God we trust, everyone bring data." And the data compiled by Bloomberg shows that despite the Fitch ratings outlook that you referenced, the market, which is the people at stake, are signaling no distress whatsoever about where Poland is. In fact, if you looked at credit default swaps on the Bloomberg, they show that there is calm and no reaction, in fact, to the Fitch ratings. And if you looked at the behavior of debt, the same thing, just bonds in general. And if you looked at the zloty, yesterday, in fact, it was the best performance since 2018 for the zloty this year. So currency, debt, people with the most at stake, they're all saying that the narrative for Poland continues to be the best performing economy in Europe.
Mm-hmm. Okay. I mean, in that article as well, you mentioned Poland being resilient. You mentioned Putin as well. Let's look at the impact. I mean, obviously, we've been concerned here from last week, those drone attacks, or rather the drones being downed, that has people worried. That was a blip on the market last week. So looking at it from an investment point of view, looking at from the United States, from other countries, how is that fear going to impact markets? Is that just a blip, or is that going to have heavier impacts down the line?
Well, it's interesting. Most of the exciting investment that has come to Poland comes from some of the biggest investors in the world who happen to be situated in the United States. For example, if you looked at the exchange-traded fund for Poland, the largest one that's in the MSCI, it shows that BlackRock, which is the world's biggest investor, for the first time, actually this year, just bought an enormous amount of shares in Poland in the second quarter. So that is really a sign of confidence. And I would say what's behind that? Americans in general look at Poland hugely favorably for a number of reasons. One is it's the closest, if you like, friend to Ukraine. And Americans are also, by a significant majority, supporting Ukraine as well. So the fact that Poland is a bulwark and is also a great if you like, dynamic economy, you could say, since the end of the Cold War, makes this still a very compelling story.
Mm-hmm. Speaking of compelling stories, I want to zoom out again. I mean, you've covered so many different changes over these last decades. If we're looking at the fall of the Soviet Empire, if we're looking at a resurgent also new Europe again, the rise of China, America first, once again. So where do you see, let's say, the greatest shock in that, and where do you see now the greatest challenges and opportunities looking forward in the next sort of few years?
Well, the greatest shock is that there's a real threat to democracy, and the shock is that it's coming from arguably maybe the greatest democracy, which is the United States. And autocracy is everywhere you look in the U.S. at this point. There are just creeping signs of it. A comedian, for example, was just taken off the air. Popular comedian Jimmy Kimmel, and that is a sure sign of autocracy. So that's the big shock. The rest of it, we've all known about where China is for quite some time. We've known about where Putin has been for quite some time. The fact that they are, shall we say, doing rather well under the circumstances, and not a little bit of help from Donald Trump. So that's kind of the big anxiety at the moment in the world right now.
Also anxiety as well, looking at energy. I mean, that is very important for many places, and particularly if we're looking at here, trying to wean off of Russian gas, trying to find our own supplies in Europe. How do you see that impact the markets? And I mean, that is shifting as well. There's a lot of support from the United States. But where does energy play a role in all this?
Well, if Donald Trump was to be believed, if you got, the rest of the world to stop buying Russian oil, that would have a big impact on the outcome in Ukraine. because Russia can't deal without the revenues that come from oil. So if those so-called sanctions were to in fact succeed, and it's quite doubtful at the moment that they will, that would make a huge difference. So energy is very much in the mix here. Having said that, another surprise has been that Putin didn't expect Europe to essentially break with Russia on energy, as Germany did, and that is a surprise. And he didn't anticipate the European community being as united as it has been so far in support of Ukraine.
Mm-hmm. And also, if we're looking at this region, I want to come back to it. I mean, resilience of Poland, you've argued for. There's still people worried that that might be at risk in future. But at the same time, if we look at Poland, the European Union, markets here, where do you see the most encouraging signs? Certain industries, and we're talking a lot about defense these days, so where do you see the biggest promise going forward?
Well, so one of the things that every strong economy needs more than anything else is a robust financial sector. And Poland happens to have exactly that, happens to have one of the best performing financial sectors in the global marketplace. You know, so far this year, I think it's number 6 among equity markets, and most of that is attributed to the financial sector. But, you know, the thing about Poland is that it is the avatar, the exemplar of what the European community was meant to be, what the single market was meant to be, which is essentially the seal of the United States, e pluribus unum, out of many one. The notion that all of these states coming together, sharing open borders, you know, for so many years, as you're well aware, the so-called Polish plumber was derided. But since Brexit, which was essentially repealing the EU, at least in the context of Britain, that Polish plumber is returned to Poland, and he and she are a lot more prosperous than they've ever been, and they've really caused a reverse brain drain from Britain and France.
Right. So despite all the chaos, it does seem that in your mind, we can be hopeful that Poland is a good bulwark and all that. I'd love to continue more. We'll have to finish there. Look, Matthew Winkler, co-founder of Bloomberg, it's such a pleasure. Thank you for coming in today.
My pleasure.
And thank you for watching World Talks. But stay tuned, much more coming up right here on TVP World, so don't go away. Goodbye.